Welcome to It's the Economy. This is a special ahead of the festive season. Now, the sector-wise growth in bank credit data released by the Reserve Bank yesterday shows a very mixed picture. Overall, credit has grown at 14.9% in August 23 over August 22, but it is slower than the 15.5 in the previous August over August. But within this, loans to transport operators and vehicles are two sub-elements that have done better this August compared to the previous August. And gold loans have absolutely gone through the roof. The numbers will come up for you. Personal loans, however, have slowed a bit. To get an idea of how things are shaping up in the festive season in terms of bank credit, and moreover, how things are shaping up for the NBFC space, I have with Mr. Umesh Revankar, Executive Vice Chairman, Shriram Finance, and AM Karthik, the Vice President and Co-Group Head of the Financial Sector Ratings at ICRA, to give us an industry perspective. Gentlemen, thank you very much for your time. Mr. Revankar, if you can give us an idea of how things are shaping up in terms of demand. Bank credit appears to be slower, but overall credit for NBFC, would it be higher in the current quarter compared to the year ago quarter?
Yeah, Latha, it will be better than the previous year, mainly because, in between, August was little weaker because of the uncertainty in the monsoon, but September, it has caught up. The rains have been there all across, except for probably South Karnataka, where there was less rains. But rest of the place, the rains have caught up, even including Madhya Pradesh and central India. The rains have caught up. So the credit demand has improved in the month of September. So overall, this quarter should be good quarter for everyone.
All right. Oh, so maybe August is a one-off month. For banks, it is very clear that the growth is slower. I mean, 14.9 is a good number, but it is slower than the 15.5 that the previous August showed. What would your views be, Karthik? Are you getting a sense that even for the NBFC sector, overall credit would have slowed, albeit a little?
Yeah, thank you. We expect at least the credit growth to remain strong in absolute terms. We could see some moderation in percentage terms with the base effect coming from the last year. But in absolute terms, we do expect the volumes that we clocked possibly in the last financial year, same quarter, we expect to do the same, at least in this quarter. Last year, we ended the last financial year with a strong 22% overall growth in the retail credit of NBFCs. Over that
One minute, Karthik, 20% is what number? It is overall retail credit growth by NBFCs?
Yes.
Okay.
Yes.
And this year, that 20% is very strong. You are expecting FY24 to be as good?
In absolute terms, yes. But in percentage terms, it will look a bit lower at about 16 to 18%. So you would clock the same absolute credit growth, but the percentage will look a bit different. So that's the thing that we'll have to keep in mind.
Okay. Yeah, but absolute is not good enough. It's a larger economy and there is inflation more than anything else. So if it's only absolute, then it's a little less. But Mr. Revankar, sector-wise, which is the one that's doing exceptionally well and which is lagging? Because clearly in bank credit, August appears to have lagged. And gold loans is the one that's gone through the roof. How is it for you?
In the commercial vehicle, demand has been good throughout, except for, I believe, the little slowdown in the smaller vehicles, LCVs. There is a lesser growth year on year. But heavy commercial vehicle, construction-related vehicle or equipment, the demand is quite good. The rural demand has come back in the month of September. So definitely, I think October, it will continue to be good. And October, November being the festive season. And the agri output coming out in the month of October, November, that will give reason for better consumption, better demand for the Rabi activity. Ultimately, whatever the income generated in the Kharif crop that gets back into the investment of Rabi crop. So that's the process happens in October, November, and plus the festive season where you buy new items, new clothes, or sometimes even a lot of new vehicles also. The demand comes in this period because it's an auspicious time to buy new assets and equipment in our home or business. So all those things should really help. So I think with the better month in September, the October, November should look very good.
Okay, y'all did, I think, 18% last year in terms of AUM growth. I mean, in Q1. Would it be the same YoY growth full year?
It's almost, yeah. We did guide 15%, but the way it is going right now, it looks like we should be at 18% AUM growth.
Okay. What about margins, Mr. Revankar? Would you be able to do better in terms of spreads than last year?
Margins would remain at the first quarter level at around 8.3 level. There may not be increase in margin because we do expect the interest rate to further inch up in the next couple of quarters by 10 to 15 basis points. I don't really think, because the inflation concern is still there. So RBI and would be little focusing on controlling the inflation. So I don't really see ease of the interest rate or interest rate coming down. Rather, it may go up by 10 to 15 basis points.
No, bank margins. Bank margins. Yeah, so bank margins are clearly 20-30 basis points lower in Q2 because they also had that ICRA, incremental cash reserve ratio issue. And there was genuine tightening during September as well, advance tax. I mean, RBI wantonly kept it tight. Will you also see this kind of a 20-30 basis points fall in margins?
I don't really think 20-30%, but 15% somewhere in around should be the impact on the margins.
Okay. What's your sense, Karthik? Are NBFCs more generally going to face as much margin pressure as banks, or will it be much less for them?
Within the NBFCs, I think we'll have to break it up between entities who have floating rate loans, essentially the mortgage lenders, and the fixed rate lenders, specifically vehicle finance and so on and so forth. So for the whole year, for the fixed rate lenders, we do factor in, at least for our projections internally, we do factor in a 30 to 40 basis point contraction in the NIMs. But there will be some benefit that they will get from the credit cost part. And overall, the profitability might not go down to that extent. It could be going down only to the extent of about 20 basis points. This is for the fixed rate lenders. For the floating rate lenders, especially the housing loan product, we don't expect any major margin contraction because there will be a good amount of pass-through which will happen. So it's a split between the two.
So fixed loan guys may find about 15 basis points lower margins, you're saying. That squares with what Mr. Revankar is also guessing. Mr. Revankar, now for asset quality. The personal loans have gone down a bit. The rate of growth, that is, not aggregate, rate of growth is slightly slower. But gold loans have gone up really strong. And we have seen the Reserve Bank repeatedly say they are worried about this extraordinary growth. Is there an asset quality worry, especially unsecured and in gold, although it is secured?
Yeah, the RBI has been cautioning on unsecured, and therefore I think the banks or even NBFCs would have tightened their credit norms, and that would have slowed down the growth in the unsecured lending. But as far as gold, I don't really see a challenge as long as you lend up to 75% on LTV. There should not be any challenge on the gold, and I think the activity around gold loan has increased multifold. Everyone trying to get into the segment because it is a very safe, short-term repayment and very consistent in the repayment and asset quality. I think many more banks have joined and opened up the gold loan. I think all those things, they have reason for gold loan being expanded and being accepted as a much easier and lower rate borrowing for the people. So I think by and large, gold loan is getting the reach what it should have been in the past. I think in the past, the banks were restrictive on the gold loans by not keeping the office open beyond 2 and all, which now most of the banks are trying to make it open for the public. So that's the reason the reach has increased, and people are using this opportunity to lap up or increase the gold loan portion instead of.
Okay. No, it's just, but you're not worried about unsecured loan in others other than gold?
No, we are not, because we believe that, most of the NBFCs, especially banks and NBFCs, they have improved their credit norms, tightened. A lot of data being available now. So I think everybody is cautious on their lending. Underwriting practices have improved significantly among NBFC and banks, and I don't really see a challenge.
Well, it's more a credit cycle also that is benign. But your thoughts, Karthik, on this? Any worries about quality of unsecured credit? I think Sibyl pointed out that loans under 50,000 rupees were showing a higher amount of days past due. But that was an old report. Do you see any unsecured credit worries?
The segment has grown quite sharply last year, and this year also we expect a very strong growth in the unsecured loans. The segment is fairly well pricing in the risks that are underlying the credit, and while we might see some delinquencies around it, this is largely priced in the way that the lenders are underwriting. So the rates are higher, the processing fee that goes with is higher. So there could be losses, but this is largely priced in. And I agree, the underwriting norms have gone up fairly well. And at a systemic level, the unsecured loans is still a very small component. I think it's less than 10% of the overall systemic credit, both in the
I'm not
put together.
No, Karthik, I'm not saying it is going to be a system problem, but I still wanted your view on, you wrote an extremely bullish report in July 2023, raising the credit growth pace of the NBFC space. Are you still as bullish on the sector? Do you stand by most of the numbers of that report?
Yeah, of course. I mean, growth and performance numbers, we do stand by whatever has come out in July. The numbers will hold up, is what our expectations are.
All right. Okay, on that optimistic note, Mr. Revankar and Karthik, thank you very much for joining this conversation. So, just a small fall in the pace of growth in bank credit. The NBFC guys are not that worried at all. There could be a slight slowdown in the pace of growth of overall credit, but doing extremely well in gold loans and in commercial vehicle loans. So August may have been an aberration. Margins also expected to be about 10-15 basis points lower, but otherwise strong on growth. We wrap up on Bazaar. Chartbusters coming up.